Hello and welcome to Binary Index Trading Session. My name is Thomas Nowakowski. I'm the Senior Strategist for Markets and You. I have been in the past a former fund manager in the United States. I've also worked in risk management for Bank of America for 5 years, and currently I'm busy developing trading algorithms for Markets and You. A few words about our company. We are in a business of providing investment research. And essentially the product is a trading signal that we provide to our clients to facilitate profitable trading. So let's have a look at what's on the agenda for today. I will first give you just a quick overview for those who are new to index trading about the different components of binary index trading. We'll talk about why we have a strong preference for trading binary index options and why we trade indices versus other binary options. We'll talk about risk management techniques, how to limit your losses and increase profitability. We'll give you some examples, trading examples of what we use to generate profits for our clients. And lastly, we'll talk about psychology of being a great trader, essentially analyzing the components of fear and greed that drive the market. Next slide, please. Okay, so what is index trading? Essentially, to give you an example, All Ordinaries, which is an Australian index, is an index that tracks the overall movement of the share market by grouping together the top performing companies. An example, the ASX 200 is made up of the largest 200 performing companies. So essentially, it's a group of companies, largest companies of a certain country, that's grouped together that gives you an overall general movement of the market and the health of the economy. So obviously, the UK market represents British companies, the German index will represent German companies, and so on. Okay, so when we trade binary options, there are certain elements that we do control. First of all, we would choose the index that we like to trade. And let's say, for example, we would choose a Belgian index. Next, what we would choose is obviously the amount of money we would like to trade. So essentially, we are in complete control of the amounts that we can trade, and amounts include below $100, so the amounts there's no minimum required. We control the start time or when we engage in the trade. Very important note here, because there are users of binary.com platform all over the world. The timing that you see is actually GMT time, so the timing has been standardized to GMT. And next, we do control the duration of the trade, and that's actually very, very important because we actually decide on entry how long we're going to be spending in the market, whether it's as little as 5 minutes, or as long as several hours or several days. Lastly, as far as the amount of capital that we engage in the trade, that's a very, very important component. What we will recommend is to engage no more than 2.5% to 5% of the capital of any particular trade. We want to be able to ensure that if there is an unsuccessful trade, we're not losing a significant amount of money. Essentially, what we want to do is place several trades, bulk of them being successful, but allow a margin of error for unsuccessful trades. Therefore, we certainly would not be betting 50% of our capital at one time. So those are some of the components that we're looking at, and obviously on binary.com platform, you're able to see what your payout is for the amount of money that you're trading. So those are some of the basics as far as indices and trading binary options. Going on to the next slide. The benefits of trading indices. Why do we have a preference for trading indices versus other instruments? Well, we like trading binary options because the depth of the market movement is irrelevant. What that means is that even a very short and small movement in the market is able to generate profits for us. In traditional markets, the depth of the market matters. For example, if we buy a stock for $10 a share, and the market moves $1 up, well, the depth of the movement is $1, and the price moving up to $11 in total, so 10 plus 1, only gives us $1 profit. So obviously we need that depth, we need that stock to go from $10 to $20 to make a significant profit. Not so in binary index trading or binary options trading. We don't need a very large movement at all. We just need the smallest tip to go into the direction we forecasted in order to have a successful trade. So any depth, even the smallest depth of the market, is able to generate successful trades for us. Moving on to the next, we'll stay with the same slide. Obviously, then we're able to make sizable gains, looking at the second component here, sizable gains with small market movements. We're able to place several trades, one after the other, and just make a profit with small market movements. Therefore, we don't need a lot of volatility. We're still able to trade in most market conditions, pretty much every day. And that's something that we definitely have a preference for. As far as the direction, obviously what's very important is we're able to make money on the upward direction as well as the downward direction. For the most traditional markets, you need an upward movement. You need shares rising in order to make a profit. Not so in this particular market. We're able to make money in any direction, down or up. Next, when we're looking at consecutive trades on daily movements, obviously we are able to make several trades by engaging in a trade in the market for 10 minutes, for 15 minutes several times, for 30 minutes several times. Therefore, we're able to place several trades on one day. That's quite an advantage because we're able to obviously break down our risk into several trades and keep trading small amounts rapidly throughout the day in order to generate profit. We don't need to bet a large amount of money at once. In order to make a profit, we're able to diversify our risk among several trades. Lastly, major world events can be used to apply to opening markets. What that means is that we like trading binary indices because they move on information that's widely available. Indices move on general economic news, on news that is widely available through newspapers, through TV channels. This is very transparent information, and that's very important because that information is available in the markets. Therefore, if we see any particular news in the world, let's say that there's a tsunami that's coming to Japan or there's an earthquake, obviously that would give us an indication of which direction the market is open in that area. That's widely available information. If we have trading data that's released that's positive, obviously we expect the market to go up. All that information is transparent and available, so that makes it an easier and more predictable trading market. Next, a very last point, leading market indicators as forecasting tools. All world indices are somewhat correlated. What I mean by that is that if the United States market opens strongly upwards, chances are that the Australian market will open positively as well. Therefore, by looking to see what's happening in the States, we can already forecast what's going to happen in Australia when the market opens. So that's what we mean by leading indicators. We can watch other indices to make a forecast what's going to happen to the ones that the ones that we trade. Next slide, please. Okay, risk management, very important component. Obviously, we need to talk about the amount, and this is one area that often apprentice traders, beginning traders, make a mistake, is that they bet too much at once. I think there needs to be a discipline in terms of engaging the appropriate amount of capital per trade. I would say that's probably the number one lesson, is not betting too much at one time, breaking down those breaking down your trades into several trades and essentially accumulating positive trades over a period of time. We don't want to make 100% one day. What we want to do is have lots of positive days, lots of positive trades, while still making allowance for a few unsuccessful trades, which is going to happen. Next, diversification. Although it's quite wise to trade several indices, if you decide to engage several trades across various indices, it's still important not to have too much capital overall engaged at one time. So, for example, if you are trading for a rising market across several indices, I'll still make sure that you're not engaging more than 10% of your capital overall for all your trades. Next, for those clients or for those traders who are in it for the money rather than the game, I would recommend utilizing services of professional investment research companies like ourselves, and essentially outsourcing all the investment research to the professionals. What we provide is a signal exactly when to trade, when to get into the market, when to get out of the market, and we essentially have a team that does it all day long, 24 hours a day, analyzing the markets. So we're good at it. That's all we do. So essentially, when you do it over a long period of time, you are become quite an expert in what you do. Lastly, as far as emotional decision making, our last point. Obviously, we'll cover that a bit more of that next when we talk about at the end of the presentation about emotional components. But we don't want to trade on emotions of fear and greed. We don't want to be twitch-setting. We want to trade on cold facts. We want to stick to the rules. We want to be disciplined and apply those rules all the time. Don't get carried away by emotions of overly being enthusiastic or overly fearful of the market. Next slide, please. Trading techniques, some exact examples of what we do to make money. One technique we use is the doubling technique. Essentially, what that does is provide you with a second life in the trade. This is an example. If we have a look at the candle where you see the marker, it's a large green candle on the left side. We're betting for a rise. However, next to it, to the right, you see a red candle. What that means is that although the market was rising, it had a bit of a fall before it rose again. So essentially, by doubling, what it does is it gives you a second chance, second life, and buys you more time into the market to allow that trade to mature. So essentially, we're actually correct in our direction. We just we're off a little bit by the time. So essentially, what we're doing is we're providing ourselves with more time to mature, to have a mature trade. So that's a doubling technique, essentially buying more time by adding a second trade and doubling the amount of money we have per trade. Range trading to your right, essentially, it's one of the simplest techniques and most widely used. What you see here are blue lines on the top and the bottom. These are Bollinger lines. Essentially, the moving average is representing resistance levels of the market and support levels of the market. Generally, what happens here is when we reach support of the market, we would expect to bounce up, and when we reach a resistance, or otherwise known as the ceiling, we would expect to bounce up. So it's quite a simple technique, and we obviously would utilize that as far as several other techniques to confirm our movements, but that's a very widely one that's very popular and very widely applied. Next slide, please. Something else that we look for in markets are aberrations, meaning that markets tend to gravitate towards the center, towards one point, and particularly when it comes to European indices, and there's lots of them, but the economy is obviously linked, particularly in the EU area. And if you have a look, we are looking at the German index. Here is far ahead at 2.15%, ahead of other indices here. What I would expect here is if we see an aberration at a certain market within Europe that's far ahead or below the rest, I would expect that to gravitate back towards that average for all the markets. So I would expect that particular market to come back towards closer towards 1.5 to 1% or a drop. And the same thing would go for would be applied to the Belgian index on the very top. It's got a large negative number. I would expect that to rise through the day and move towards the green area of and to rise towards between 0 to 1%. So we look for mixed markets. Obviously, we would bet the German market coming down, the Belgian market going up. So we place two trades in opposing directions. That's what we call a mixed market bet trade. Trading markets. This particular technique is used on new news releases. When there's new numbers that come out, when there's new information that comes out, that tends to immediately affect the market, and market tends to have a certain momentum. So it's very much like driving a car and hitting something that has a momentum for some time, and then it slows down as that momentum gets exhausted. So what we do is we would certainly jump on any trending markets or any markets that have a certain impulse and ride that out till the movement gets exhausted. So these are generally quick movements. We generally would engage in the trade for around an hour or up to an hour. and possibly place more than one trade within that hour to actually get several positive trades within that single movement. Next slide, please. Okay, psychology of a great trader. We'll talk about the emotion components that play a very important role in the market. Essentially, market is driven by people, and people are driven by emotions. And there's two major emotions. It's the fear and greed. Obviously, a lot of the people get very excited, very enthusiastic about a movement when they're making profit, and they may actually place too large of a trade when the market's moving in a direction. Otherwise, they may fear too much if the market's moving against them. Emotions are responsible for overextended movements, and this is very important. It's very important to trade without emotions and stick to a certain strategy, stick to an algorithm. Reading emotional component can really not be taught. It has to be experienced. And ultimately, I believe experienced traders are much better at reading that. And there's no particular algorithm that can be developed for emotion. We can certainly develop mathematical models and charting and past data, but we cannot really have any tools that gauge emotion except just experience and of a particular trader. Can you go to the next slide, please? Therefore, as far as the emotional component of trading, I would highly recommend utilizing services of professional firms that accommodate and account for that component of emotional trading, particularly when markets have exaggerated movements. And looking back at technicals and charting really just are able to give us what happened in the past. We're able to analyze data what happened in the past, but we're not actually able to use charting to see what's happening at this very moment. What are the emotional drivers? What just happened? Was it a terrorist attack? Was there an earthquake? What really happened? Was there a declaration of war? Charting is going to tell us that, but information, current information, and just being able to gauge that emotion is going to pretty much give us an indication of what that emotional driver is and how far it's going to take the market. So again, I would leave that particular component really to experienced traders who have been in the markets and seen markets move, and that ability to read the emotion component, to forecast what's happening, just comes through experience. And lastly, at the end of our presentation, I would, if people are trading for the profits, I would recommend they use the very best platform like binary.com and utilize the very best services to give you an advantage. Investor research services are quite important. We're quite good. Our rate of success rate of trades, the forecasting trade is above 85%. Therefore, all of our clients are profitable using our trading recommendations. That comes to the end of our presentation. We are now open for questions. Okay. I'd like to also thank Binary for providing this presentation, opportunity to speak to the audience. Okay, just a moment. I think we should have questions coming up. Okay, we have a question here as far as what assistance is available in terms to traders. I think there's a lot of information on binary.com platform that can get you educated in trading. Also, when you compare a lot of the payout ratios between the binary.com platform or preferred platform over other trading platforms, you find that the payouts are much better, are much more fair on binary.com. That's why when we are responsible for trading for our clients' profits, we use the very best platforms available. As I mentioned before, there are different charting tools that you can use. There are different investment reports that you can use. There are trading signals that can be purchased. We certainly are able to provide all the above information. We have another We certainly are able to provide our clients with any trials or answer any questions. We have a customer service team that's able to accommodate your needs, and that's able to give you some samples of our signals, if you like, to perhaps compete and place your own trades and versus the trading signals that we provide. That's certainly a very healthy and competitive game that we can engage in. Ultimately, I think what's most important is profits at the end of the day. So I think that's the most important element in trading, profit. We certainly support clientele across the globe. That includes United Kingdom, Australia, and all of this, most of the English-speaking world. Any further questions? We have a question here. What amount of money is needed to start trading indices on binary.com? Really, it's insignificant. You can open up an account with any amount of money. $100 will do. So therefore, there's no particular amount, a minimum amount to engage. It's quite without risk. You're able to try. There's no minimums, which is obviously very attractive. Another question that's coming in: is there age limit to trade online? I think that's a perfect question for binary.com. I believe that's 18 to trade. The time needed. There's a question coming in. What is the time needed to be successful in trading indices? To be very successful, it takes a very long time because, again, as I talked about the emotional components of trading, that really just comes with experience. And certainly, charting techniques are valid. Certainly, there's a lot of tools out there that can be used, but ultimately, to become a master trader, to become profitable or very profitable, I would essentially utilize and leverage yourself by utilizing services of professionals and outsourcing the investment research service to those who do it every day. And I would recommend trading signals. I certainly see a lot of value in that. And certainly you could experience that by engaging in the trial. I have the following question. I have relatives in Australia. Who can they speak to get help in learning more? To answer your question, I would go on marketsandyou.com website. That's marketsandyou.com, and there's quite a bit of information that's available. We are an Australian firm, therefore it's quite easy, I think, for anybody in Australia. Actually, anybody in the world, there's no restrictions. For questions directed to binary.com, you can certainly send an email to helpdesk@binary.com or contact binary.com for a live chat. All your questions regarding trading platform itself will be answered by binary.com. So there's quite a bit of information available. It's quite easy to engage. Again, no minimums. Trial accounts are. Yes, we have a question here from George. Do we offer a trial period for our index suggestions? We certainly do. We certainly believe that you should try before you buy. We certainly would be able to provide you with trading signals for the trial account before you make a decision. That's certainly available, yes. Okay, I believe that concludes tonight's session. Thank you very much. I'd like to offer a special thanks to binary.com, and thank you for everyone participating. We look forward to hearing from you. Thank you. Bye-bye.